Hey, hi everyone. Just wanted to thank everyone for your time. I think this is the first of our espresso series, and the whole ob objective about this is to kind of share what we are seeing and how we are thinking about the whole COVID situation and how people are looking at the private markets and on what are the various initiatives that we are doing, and we thought to share that with everyone here. Once again, thanks very much for your time. So in the next half hour, we're going to be covering some of the slides here. Cecilia, can you just share the screen then?
Mm, Yes, Johnson, I'm already on share screen. Can everyone see our screen?
Yeah, they are saying that the screen is up there. Okay, great. So if we can move to the first slide then. So how we're gonna run this is that I'm gonna talk a little bit about ourselves, and then things. So my background is that I've been building companies for quite some time. And the story is that, when I was starting these companies and all, I always felt that the whole private markets and the capital raising could do with much more improvement. So one of the key problems was that, raising funds has always been a very haphazard process. And most of the time, you're relying on your personal Rolodex, who you know, and most of the time when you meet people, they may not be ready to invest, and as a result, you spend a lot of time talking and trying to actually get the relevant people in with very little result. So as a result of that, we thought that there must be a better way, and that's how we started CapBridge. And CapBridge is meant to be an integrated way whereby we help to not only raise growth capital, we also have a liquidity solution to actually help and facilitate the investment instrument, and that's what we're gonna talk about a little bit more. So so can I have the next slide? So the agenda for today is that probably I would love to share some of our observation, what the private markets are doing, and we're going to talk a little bit about convertible bond as an instrument and why this makes sense. Then I'm going to hand over to my colleague Cecilia, who will then talk about what we are doing as a company under CapBridge Financial. What are the advantages? What are the typical processes and time frame as one of the actionable next step, and how to get and engage? Thanks. So firstly, on the market trends. So this is really kind of summary where we see what has happened in the first quarter and where we see things going. So in the first quarter, what we have seen is that there has been the whole pandemic situation was just starting to come on, and we have seen some of the investors and the companies react by having the companies doing a little bit more of a cost control measure, just to prepare for the unknown. And we've also seen the investors pulling back. So the whole premise was that with higher uncertainty, more people are staying on the sidelines, and we're also seeing this carry through to the second quarter, whereby obviously there has been a lot of announcements on the government stimulus, and I think this has given some of the private companies a little bit of a breathing space. But we also are seeing that they are still taking the view that they would like to manage some of their costs and shift it more to a more flexible way in the notion to reduce their cost base, so as to extend their runway. So where we see in the next quarter moving forward is that we're seeing obviously a lot of the companies moving towards the digital platform, and one of the key things now is that what we have designed CapBridge Financial to be, and where we are positioned, is that we are basically a virtual fundraising platform. So for CapBridge, we're actually digital, and we are kind of born in the cloud. So we are pretty well positioned here to really help and use our technology in a way to actually facilitate capital raising. And this makes sense. I mean, we always thought that the ability to connect virtually and to save all the traveling times and road show would become one of the mainstays. And I think this whole pandemic situation has just helped to catalyze this. And for quarter four, what we are seeing is that probably there'll be a lot of opportunistic capital coming in. We are already seeing quite a few of the investors looking in our data room. So there is some interest here to actually get ahead of the curve. And the other big theme that's coming out is M&A. So a lot of the more stronger balance sheet, larger listed companies are also seeing this as an opportunity to actually look at the strategic investment as a means to actually expand and move into the region. And I think we'll probably see a lot of these activities over the next 2 to 3 quarters in terms of these value in investments. Yeah. So little bit about the private investors now. So the key takeaway is that there is quite a lot of private capital still, and this is taken from a lot of the fundraising that's still been going on. As you know, last year and the previous 2 years, there have been a lot of activity in the fundraisers. As a result, the dry powder is still there because typically these funds have a mandate size and a time horizon between 8 to 10 years. So they're still in the investment stage. So the key takeaway is that there are private investors, especially for some of the funds. The family offices have also been quite prudent in some of their investments, and they do have dry powder. But the key theme, which it comes back to us all the time, is that they're seeking quality assets, and they're seeking the adjacent type of businesses to complement their core. So the private markets is an interesting space now. So as you know, there is a public market and the private markets. Obviously, the public markets, it's been there for a long time, but the emerging flexibility and the emerging importance, so to speak, of the private markets is coming to bear. And the key reason is because of the flexibility. So as you know, in the public markets, they're very set structures. And I think where the private markets can probably play a much better role in terms of speed and the success rate is because of its flexibility. And we're going to talk a little bit more about that. So the private market does offer the flexibility to actually structure something and structure the instrument that fits the capital need. And the whole point is that we do have templates and structures that can help to facilitate this. And I think one of the things we're going to talk about is the convertible debt and why this makes sense. So how does a convertible bond work? So there's a lot of talk about convertible bond now. The key reason is that most companies, if they have the access to banks, they will probably do it in the debt. And I think for most of the private investors and the funds, they are probably going to be quite hard pressed because of the government backing and the underwriting of the risk. So it comes down to really structuring something that will give the private investor a little bit more upside, and for the companies to be able to do this quicker. So one of the problems is that the banks will typically take a longer period of time. So this could be a nice alternative, and we are seeing some of the companies moving down this route. So basically, it is an instrument that is a quasi equity, whereby there is a debt component paying some yield, and there's usually a milestone event that allows the conversion. Usually at the election of the investor or at the election of the company to convert this into equity. And this plays well because of the fact that it also fits into our private exchange, which I think Cecilia is going to share a little bit on. Next slide. So on this next slide, basically why convertible bonds and why this makes sense. So I think some of the terms about the convertible bond is that it can reduce the borrowing cost, because you're basically pushing the conversion, and in certain cases there is no interest component to it, and it's actually converted at a future round valuation. So you can, in some instances, save the cost of the interest component. This is also designed that there's no need to talk about the valuation, because one of the critical points in a lot of the equity fund raises has always been the sticky point about the valuation. So the convertible bond structure typically pushes the valuation discussion down. So it allows for a faster rate of close because it's typically done at the milestone event at probably a predetermined discount. And because of the private markets, as mentioned, there's a lot of ways to actually structure this to actually make this as a nice way to align both the company and the investors' preferences, and to allow this to close. So it really it's a means to actually get things done pretty quickly. So what does CapBridge do, right? So CapBridge basically is an online digital platform. We basically have a KYC list of investors, and these investors are typically your funds, the VCP funds, the sovereign wealth funds, and also the family offices. So these will typically come in and price the convertible bond and do the diligence. And thereafter, we actually move and bring in the co-investors. So the co-investors are typically, your family offices, your ultra high net worth, and also individuals, and also the private banks. So we do have distribution agreements with the private banks to actually show some of these opportunities to their clients. So it's really a framework and a platform to allow investors to have a wider choice and a wider reach in terms of the available deals, and at the same time for the issuers to also have a standardized way to actually help to reach out to a broader base of investor, as opposed to the traditional way. And I think this is very salient now, because in these times it's just not practical to be meeting so many people. So we basically do it on a digital platform, and use logarithm to outreach digitally to the potential investors. So with that, we're moving to the next section now, and I'm going to hand it over to my colleague Cecilia, who will walk through the next part of the seminar. Thank you.
Okay, thank you, Johnson, for sharing your insights in this difficult time. So a very good afternoon to everyone. My name is Cecilia Sim. I'm the head of syndication for CapBridge. So I would like to take this chance to introduce what we do at the CapBridge Financial Group, and focus a little bit more about how do we fundraise in these uncertain times. So starting off within the CapBridge group, we have two entities. So the first is the CapBridge online syndication platform that is mentioned by Johnson. So it's a platform that we built to connect fundraising companies to investors. So how we are different from the traditional corporate bankers or the investment bankers is we use a lot of technology to reach out to late stage growth, pre-IPO companies that wants to fundraise. So we work with them to populate a profile on our platform, and we have developed a proprietary smart algorithm to curate a list of investors to reach out to. So for private investors, why would they want to come onto our platform to invest? So by what our platform also does for private investors is they can access and participate in high quality institutional grade investment opportunities that are previously not available to them, only available to the bigger guys. So moving on to our second entities. So I would take this chance to briefly introduce OneXchange, or OneX in short. So OneX is the first regulated exchange for the trading of private company shares in Singapore. And some may say in the world, we could be the first. So we are also widely regarded as the third board in Singapore for listing of company shares. So for full disclosure purposes, Singapore Exchange is one of our strategic investors and partners. So we have built OneX on the blockchain, and OneX is designed to be a light touch, cost-effective private listing venue for family businesses, growth companies, and pre-IPO companies. So we will also be hosting a webinar to introduce OneX at a later stage. If you are keen, please drop us an email so that we can also invite you for that. So how does this work together as CapBridge and OneX for a holistic private capital market solution? So let me start on this side with the CapBridge syndication platform. So so we have the CapBridge syndication platform. We also have OneXchange. So this is our holistic private capital market solution. So let's start with the viewpoint of the business owners. So you can be a small, medium enterprise, you can be a family business, or you can be a growth company, pre-IPO companies. So typically in your fundraising process, you will always, for example, if you are looking to raise your Series C to pre-IPO, you can come onto our platform where we will curate the deal and match your company to the right investors. So as mentioned by Johnson earlier, we can reach out to institutional investors such as the strategic venture arms, the listed companies, the VCPE funds. And when a lead investor is actually secured, then we will place out the rest of the deal to co-investors, which can be family offices, ultra high net worth individual accredited investors on this side. So upon a successful fundraise, depending on the company and the investors, if they want to lease a portion of their shares to be traded, they can actually, it's fully integrated. We can push it to lease on OneXchange for tradability. So that is the first path if you are raising money as the company grows towards the full progression on IPO on the public market. So on the second path, if companies, for example, you are a family business and you need to start planning for succession planning and you want to realign some of the shareholdings, you can choose to do a direct private listing on OneXchange. Then when the time is ready, either you stay on OneXchange or you can progress towards a full IPO on NASDAQ or the Singapore Exchange. So we can talk about OneXchange in a separate seminar later. So moving on. So to recap, CapBridge, our CapBridge financial group, we provide a multi-channel and cross-border investment solutions for private companies and also private equity investors. So what we have is we have a very flexible systems and processes. We can target for lead investors. We can switch to co-investors. We can support equity fundraise. We can support convertible fundraisers and pre-IPO fundraisers. So we are integrated with virtual data rooms or digital, and we can integrate it with 1x for partial exit if needed. And what we, one of our biggest advantage is that we can enable companies to engage a more global investor base very, very efficiently. So I will go into that a little bit more later. So just to share some of our deal stats. So as of end December last year, we have onboarded more than $2 billion of deals to fundraise on our platform. As of March, we have about 50 companies that are actively fundraising. So the typical range of fundraisers ranges from $4 million to $100 million. So moving to the second part of my presentation, which is probably the most interesting part. So in these restrictive times where most of us are working from home and no one is traveling, no one is meeting up. So how do we fundraise virtually and effectively? So moving on. Okay. So this is where CapBridge can come in. So as mentioned by Johnson, what we can do is we can help companies like your companies fundraise digitally for efficiency. Our platform intelligently match and seeks and match companies to the right investors. The platform is open 24/7, allowing investors to come in all the time to review deals at whatever time zone they want, and whether is it a public holiday or whether there's an office closure. In fact, at this point, let me share a very short, interesting anecdote about what we have observed on our platform. So for the past few years, what we have noticed is during the year-end holidays, where from Christmas to New Year's Eve, that is when we would notice a lot of traffic from investors on our platform. So initially when I saw it, I was like, wow, these investors are all working, but I was like, hey, no, but it's year-end holidays. They're all on holidays. So they are actually taking a break from family time to browse certain deals to prepare for the new year. So when I was thinking about it, it's like, wow, okay, that hit me. That is actually one of our biggest advantage of our platform versus the traditional investment bankers, the offline advisors, is that we are open all the time. Our platform is open all the time. There is no downtime. And even when you are not working, it's actually working for you. So I mean, that is one of the biggest advantage that I would love to share. So, so moving, okay, enough of my story. So moving back to our platform. So as a virtual platform, we have greatly reduced the need for physical meetings to enable fundraising processes to actually continue. So, okay, so let me jump a little bit more. So let me break down the process of how we do it at CapBridge and how we are able to accelerate your fundraising process. So as mentioned earlier, we are all digital, everything is virtual, everything is online. So what we have done is, because we have standardized processes, templates, we are able to reduce each step of the typical fundraising process from months to actually weeks. That is why we have it down by weeks. So we will work with the company to create a profile on our platform to show investors. And once it's ready, it will go live on our platform. We will push it through our proprietary algorithm engine to generate and curate a list of investors to reach out to. So after we do the reach out, we will connect with them. We will actually track how are they interacting with your information or your deal on email, on our platform, and off our platform. So then once there's interest, we'll set up a call, physical meeting at a later stage to actually connect our companies to our investors. So thereafter, it follows a more conventional process whereby negotiation on the term sheet, due diligence, and the finalization of the legal docs. So we are able to support through the whole process to shorten it down to 3 to even 6-7 months versus like, taking every step taking a few months to complete it. So our business model is we work mostly on a success fee and also a very small technology service fee. So to note, to support our fundraising companies in this uncertain time, we are actually waiving off the technology service fee for Q2, the second quarter of this year. So it's a way for us to show a little bit support for our fundraising companies. So moving on. So what are the 3 best practices on virtual fundraising? First, get started ASAP, as soon as possible. So determine how much you want to raise, engage a syndication expert like CapBridge, and prepare all your documentations from your pitch deck, your valuation model, your financial projections. And second practice, engage investors actively. So do it through multiple channels, offline, online, cross-border. Talk to different groups of investors, VC, PEs, strategic investors, family offices. And thirdly, and most importantly, actually get access and leverage on networks. So to keep talking to investors, you need a lot of friends with a ever expanding network. So what we have done is, for example, by working with CapBridge, besides being able to reach out to a group of curated targeted investors, you can also leverage on our partnerships, as Johnson mentioned earlier, with the various banks, the various investment pools to actually syndicate and actually distribute and fundraise faster. Okay, so how do we get started? For companies, you can come onto our website, www.capbridge.sg, create a company profile to put in some information and start your whole journey. So you will have to indicate on our platform what kind of investors you are looking for, how much are you raising, and share some of your information through a secured data room. And upon a successful fundraise, share your legal documentations and with the investors. And once it's successful, everything is dotted and signed, the fundraise will be transferred by the investors upon completion. So that is what we do. So I have come to the end of my presentation. So let me just give control. So if you have any question, we have three more minutes. If you have any question and if you'd like to know a little bit more, you can feel free to email us.
So yeah, thanks Cecilia for that. Hope that you found this informative. We would love to connect with you, share some of our experiences. Talk through the various things that we have built. So we have a suite of products that allows like a global NDAs and all these things to really help to compress the time. And we have put our information here. Feel free to email us or reach out to Cecilia, who will be able to help on the fundraising side. With that, I think we are just coming to the end of the time. And if there's any question, again, feel free to post it and do an outreach to us then. Right. Oh, okay. So there's a question about the early stage startup. So right now, our investor base and because of our partnerships with the SGX, we have tended to look at the kind of the later stage growth. So typically the pre-IPO or the what we call the pre-IPO kind of a Series C. So we typically we looking at the investment range between 1 to 3 years, or in some case 2 to 4 years out to a liquidity event. We do have some of the criteria simply because some of our investors are really looking in that space. So we are positioned more towards the later stage, whereby as Cecilia mentioned, we work with the institutional and the bank, and more as a funnel towards the listings. So on the private banking side, on the family office side, they have tended to go more towards the late stage companies. On the early stage, there's a lot of other options now, especially in the equity crowdfunding and all this initiative and debt funding. I think that's not really our full focus area at this point. So we are really catered towards and the later stage things. And for our base, the investor base seems to be more keen to do that. And I also see another question about the industry or geography. Where we are positioned is that we are industry agnostic, and we are a global platform. So we do have companies and issuers coming from Korea, from Japan, Australia, in India, Europe, US, so forth. So really no geographic constraint. One of our key thing, as so what Cecilia mentioned, is cross border. So we are seeing a lot of trend, especially the Korean funds or the Japanese fund having a lot of interest now in Southeast Asia, and that's where we're trying to facilitate this. So the whole idea is that we have a platform that can allow multiple deal opportunities from the investors, and for the issuers also, I mean the companies, multiple ways to also outreach to the same investor pool. Just running a little bit more, and there's a question now on the ticket size. So we have done quite a broad range. We typically do between 5 to 25 million raises for the later stage. For some of the earlier ones, we have done a little bit smaller, but that's on a case-by-case basis. Yeah. Cecilia, you want to add anything? If not, probably yeah.
Yeah, I think you have covered, yeah.
Okay, so yeah, I hope they have given a kind of a rough parameter of where we see we can be most helpful. And once again, thank you all for your time. And this is meant to design to be a quick espresso series, and stay tuned for the next ones then. All right then, much thanks again.
Yep, okay, take care, stay safe everyone.